Okay, in this session we're going to get right into the charts to examine the principles that we discussed in the last session. We'll be carrying on with the current market example that we've been going through from session to session. So the last time we left off, the market had broken out of this 5-day balance area and had that trending up move and then closed near its high. So what I've done now is I've drawn in the important support and resistance zones as we head into the next day. So we see that in terms of resistance, we have this important one that was drawn while we were still here on Friday, and this was the place where this major gap started, pushed us out of the bigger balance area that was existing for about a month and a half, right? And it was also a confluence area, so we said this was a very important resistance zone. And now in terms of support, we have some new ones based on the latest day, the breakout day. Let's go a little closer and examine those. Okay, so first we have the black line is the close of this last day, so that's always important when we're opening up away from it. And by the way, this current day we're opening up somewhere right around here. It's a gap up. Okay, so we have the close of the last day. We have this high volume node of the balance of the last day. The majority of the day ended up balancing after the major trending move higher in the morning. So the thick part of it is right here from 21 to 23. We have that highlighted with these two green lines. The next support zone is from 14.5 to 16.75. And what is this? Well, this is, let me zoom back out for a sec. This is the top of this balance area where we had hit it once, twice, 3 times, 4 times, and then finally broke out. And what do we know? We know that resistance, once broken, becomes support. So now we expect the top of this balance area to become a support zone, and that's why this is drawn in. Alright, now let's zoom back in. Okay, and finally, what do we have? Well, this day opened up here and shot up. If you remember, it was an open drive. So this bottom part of where it launched the trending move will also provide some support. And then finally, if we were to come back all the way down here, there would be the close of this gap. Okay, so here are our zones for this current day. Now, as we open up in this current day, right, we've already discussed a couple sessions ago how to read the market at the open and what all those things mean. But from what we learned in the last session, what are we thinking in terms of general principles? Well, the first thing we're thinking is, are there any automatic fade zones? Ones that you're pretty much gonna fade unless there's an outright trend against them. So what do you think? If you want, I'm gonna zoom back out for a sec. Okay, if you want, pause the video, take a look at this, and think if there are some automatic fade zones that we would have. And keep in mind, we're opening up with a gap up right around here, like I think 28 or 29 at this day. Okay. Alright, so I hope you've thought about it, and there's never a perfect right answer. What you think could be different than what I think, and you might be more right. But I'm just going to tell you how I would view this based on my whole experience. And to me, the automatic fade zone in this context, in this example, would be this resistance zone right here. Now, why is that? Well, like we had explained numerous times before, this zone really fits two of the major principles. One of them is that it's a confluence area. There's a gap close here. That's one. Two, it was a launching point of directional conviction. The gap was the launching point, so that's two. And three, there's these two previous highs I met here. one on a Friday and one the following Monday, that both got rejected down sharply before this launching point. So we have a confluence area of about three things all in one. So that's the first reason why it's important. But the second and more important reason why this is, in my mind, an automatic fade zone, and why I had discussed it when we were looking at things on Friday as a very important zone, is why. Let's zoom out a bit and see. Okay, here we are on a bigger time frame, and as we see, this, which is now our important resistance zone, was the point where we launched out of this major balance area that was a month and a half long. So that's why this is significant. This was what took us out of this, and this is where the area where it started, this move began, and the sellers took control. Okay, now in terms of the other principles, this specific resistance zone in itself is not a bigger picture or larger time frame one. The whole balance area is larger time frame, but this specific launching point is not a huge one that's visible on like a monthly chart. So that is not met, and also it's not in the direction of the bigger trend. If you remember, the bigger trend is up, and now we've just balanced, now we're broken up, and we seem to be confirming the bigger trend, so it's actually against it, right? But we're also day trading. This isn't a swing trading thing. And in terms of day trading, those other two principles that it meets, which is the confluence point and the launching point of this major breakdown, make it a very important point. Okay? Now, the reason why on this specific day it would be more of an automatic fade is the fact, and let's zoom in again, that on this current day, the pre-market action, the overnight Globex session, is showing us that we're set to open up somewhere here around 29 or 30 or so, like pretty much right into it. After what? After a previous trending move. Now, on the one hand, yes, this is all bullish. We were just breaking out of a 5-day balance, and we broke out hard, and we could potentially expect much higher prices. On an intraday time frame, okay, what we got to be thinking is that after a trend day, usually we don't just get another trend day, and I explained this before. It happens once in a while, but usually we get some sort of consolidation move and then a thrust higher if this is to continue higher. All right. Of course, it might not continue higher. This whole thing could be a fake breakout on a even bigger time frame, but let's not go there for now. The essential point is that if you've just had a trending move and now you're gapping up on the following day, you're most likely going to see some sort of consolidation, all right, before taking off higher. And given that we're day traders, this would make sense. That would be the most likely point that we'd get an initial reaction, especially since, according to principle 3, first tests are important, and this is the first test of this area. Okay, so gapping into it right off the open would probably be a great sell based on these principles. All right, and so let's see what happened. Let's go down to a 1-minute time frame. All right, so here we see the market opens around 29.25 and shoots up where straight exactly into the zone. Okay, so we're hitting right into it. Now, since we had identified this as an automatic fade zone, you'll see later once we get into the exact execution that you would just pretty much place your sell order right there in it. Okay, and you would just play the odds. Yes, it could keep shooting right through, but when you're trading, and there's a whole psychology section in this training program, but I'm going to be hammering in correct trade psychology as we go in the tactics and execution. And the right psychology to think is, no matter how scary this is, you would just take the order, you would put the trade in, and you just let probabilities play out. Sometimes it's going to be a loss, that's normal, but overall, if you take these kind of trades, you're going to come out ahead. That's how you have to be thinking. And so anyway, you would take this trade, and let's go forward and see what happens, because then we're going to get a chance to discuss other principles throughout this day. So we see it dropping all the way down, straight off the open. All right, just we hit it and bam, straight down. Now, what about in terms of profit potential if you had taken this trade? Well, like we said in principle number 9, the more important a zone, the bigger profit potential there is likely from it, right? Now, in this example, the most logical profit target, of course, would be just for a fill of this gap. This would be the closest support, okay? And it happens to be right above this support from 21 to 23. So this would be a logical place to take profit on this short setup. This would be decent, 6.5, 7 points of profit. Now, if you had just put a 2 point stop above this zone, which would also make sense because, if we shoot right through it, then you don't want to stay short. It's invalidating this zone, and 2 points above it is enough of a buffer, all right? You'd have a 3-to-1 reward to risk trade, and that's very good. You take that any day, especially with decent odds that this holds. Anyway, again, we're not gonna get into execution yet, but this is just showing you what would be a typical example of an automatic fade zone and why, especially in the context of how it got there, right? That's another one of those things that we discussed in the principles. How did price get there? Well, price got there on a gap up after a trending move. Usually, when you have a trending move and then you gap up the next day, all the retail crowd is excited. They think we're going to get the exact same type of move, and they're buying in hope of that. Whereas the professionals know that 2 of these moves straight in a row are unlikely. Not impossible, but again, context, we're slamming right into a resistance zone, so it makes sense here. Okay? So now, in terms of a buy, right? So now we've had this sell. Now we're entering this buy zone right here. Would this be an automatic buy, right? Would this be an automatic fading zone for a buy? Well, let's review things. It's not a bigger picture support zone. It's just from the last day, right? A major move did not start from here. There's no major confluence. Yes, there's this gap, but these are both from the last day, nothing major there. But it is in the direction of the whole bigger trend and the breakout out of this balance and the recent trend day, so that is good. Well, you have 1 out of 4 and it's not a major one, so this wouldn't be an automatic fade zone, but it would be a good fade, i.e. a good buy, if what, like we said, principle number 2 is that, since most zones are not automatic fade zones, you would only take a trade there if the bias is not very strong against them and if we're seeing some sort of exhaustion or divergence setup at them. All right. Now, let's talk about the first thing there, the bias. Well, the bias is that we had gapped up and shot straight down. Now, if you remember when we read the market open, this is technically an open drive straight down. I mean, this thing open, touched this and just slammed straight down. So we have to have that in mind that, hey, we did open drive down. That's a note of caution. Now, was there a potential for trend on this particular day? Like, did the conditions meet? Well, if we remember, this was the Friday where there was some big numbers coming out. The employment number was happening before the market open, right before. So that was one thing. Volatility had just expanded as we took off out of here. I mean, the day's range, if you include the gap, the previous day had shot up to over 20 points. So the volatility environment might be becoming bigger, where trends are usually more likely. So that's 2 conditions. We did not have an error range day obviously before because this was a trend day. We did have a mature balance, but we already got the breakout out of that as a trend. So, in general, a couple conditions were met. The potentially larger volatility environment, the important news, and the gap, right? Now again, in terms of a gap, we were gapping away from this whole balance area. Whenever you have a gap, the potential for trend is higher, whether it's with the gap to go open and go straight up or against the gap like we've seen. So one side rejects this new perception of value. So, basically we potentially do have 3 out of the 5 conditions met. Definitely the potential for trend is not nearly what it was when we were still in here. But it's there. It has to be in the back of our mind that, okay, there is some potential for trend. And the initial action shows that we've just opened and driven down. So that stays in the back of our mind. However, bigger picture is this is all bullish, right? We got the reaction off the resistance, but now everything's bullish. We just broken out of the range, and now we have this support zone. So we would be looking reasonably. You could be looking for a buy here, but it wouldn't be automatic. You'd have to see a setup. So what would be a setup? Now, we're going to get into those when we get into the execution part of things, where we'll look at specific setups at zones and all that. Maybe we'll revisit this exact example to see that. But for now, suffice it to say that if you saw a setup here, some sort of divergence setup or something, you could definitely take a long here for a potential retest of this high or something like that, or just a quick bounce off of it. And if you didn't see a setup, if there was nothing there, given the fact that we were driving down right off of it, maybe you would just avoid buying here. All right? That's how you have to think of things. And again, there's never a clear answer. It's judgment calls based on the information the market's giving you. But let's keep going here to see what happened and what other principles we can highlight here. All right? So let's scroll forward. All right, so the market we see just barely stopped and was tanking right through this area. It came down, barely touched high, and kept tanking right through. So not the most normal behavior, but now it's telling us, okay, maybe the open drive down was more serious. All right, let's keep scrolling through. So it's sitting here, it touches the lower part of this area, right? It touches here, and this is in itself a mini support zone because it was the last low before taking off here. But basically we've hit here, and now what are we doing? We're balancing within this previous kind of support zone. So yes, this specific one was broken, the high volume node part, but we seem to be holding here. Well, where's there another support zone? Like we said, previous resistance becomes support, and this is the support zone. This is the top of the previous balance area. Now, here's where we're going to put some of these principles to work. Okay? On the one hand, this should be a good support zone. Not only did we just break out of this balance area, but now we're coming back to test it. So on the one hand, that's good. On the other hand, we said what? How the price approaches an area is a determinant of whether that area will hold or not. Now we said that if you have very sharp movement into an area, that's actually a good thing because it'll show exhaustion. So if we had opened here and just dropped all the way straight into this area without resting here, that would actually be a good buy. As scary as it might seem and as counterintuitive as it might seem for this thing to be tanking down, what'll happen is usually that'll hit short-term exhaustion here, and you'll get a predictable bounce, and you can take a decent profit. You could get a 3 or 4 point bounce off here, and if you're having a 2-point stop, let's say you buy in the middle of here with a 2-point stop, you could get a 2-to-1 reward to risk, which is decent. But in this case, it didn't do that. In this case, it came down and it's balancing, so it's resting, right? And whatever exhaustion it had, it already kind of did the bounce off of it here. It had a 3-point bounce here, and now it's just kind of moving sideways. So the question becomes, do we buy in this support zone? Right? We're thinking tactics here. We're seeing how to actually now implement this trade plan that we have in place. And of course, you would have put scenarios in. We didn't go through that again, but you'd have those. And those scenarios should have covered these likely things. But now you're seeing it live. So the question is, do you buy here? Well, Again, there's never a complete right answer, but in this case, if you're getting a balance area and if this thing extends even more, if we break down into this support zone, we'll be breaking down out of a balance area, which is actually quite bearish. And it'll be initiative, high conviction activity to break out of a balance area into a support zone. And we have the fact that this was an open drive off this resistance with some decent conditions for potential trend. So if this thing's actually going to break down here, break through this whole support after it balanced within it, everything's looking quite bearish, right? At that point, everything would be looking quite bearish. The bias would be strongly against this, right? And you'd probably want to skip this, to skip buying here. Again, if it had opened and just drove straight into it, it's a buy. But it didn't. It balanced here. Okay, so let's see what happened here. So price kept moving sideways, and here we go. We got the breakdown out of this, what essentially was about 2 or 3 hour or so balance. It's pretty long balance, pretty tight too. And now we're getting the break out of it straight into the support zone. Well, what does this look like to you? Open at the high, drive down, balance, now driving down again. This is looking like a trend. If it looks like a trend, if it smells like a trend, it's potentially a trend. So, even though maybe we wouldn't have been able to forecast this early in the day and be waiting for it and get in early in the direction of it, because we got in on the short here, but we took profit here because that was logical. At the very least, when you sense a trend like this, open drive, balance, breakdown again, get out of its way. At the very least, don't try to fade it. If you can't get on board of it, don't let it hurt you. And so let's see what happened here. So, okay, it seems to be holding, right? We hit the support zone and we held. Here it was a break and then we held. But again, we're not scalping for ticks here. There's no edge in that. And we went through that in the beginning of this section when we discussed what are the requirements of a strategy with an edge, and one of those requirements was economically feasible exits. So this would not be, buying at 15 and getting at 16 and a half. That's not economically feasible. So far it hasn't proven anything. Let's keep going. And bam, we just tank straight on through. You see that? Barely balanced here, and we tank straight on through. And where did we reach? Pretty much close to this support zone. And we got a nice bounce right before it for 3 or 4 points. But again, you would not have been buying here. Now this is confirming itself to be a pure trend day down. And when we have a pure trend day, we don't try to fade. What do? We try to actually get on board the trend, right? And we'll be getting into how you get on board the trend. This isn't for this one. This is talking about the principles. But now the question is, would you buy in this zone? Well, I just said, this is a trend. I would not be buying in this zone. I don't care if it's an important support zone. Trends are strong. So let's see what happened here. We did get a bounce, but straight back down. So we got like a tiny, you'll get these, little 1-2 point bounces, but you can't really play those for anything that has an edge. And then straight back down all the way down the day, and it ends up being a massive downtrend day. Now this one was hard to call. As I was actually watching this day live, yeah, this was a great short trade right here. Pretty much a no-brainer, but I was not expecting this downtrend day. Until we were balancing here, and then the breakdown came. Then it was like, okay, this could be a big downtrend day, so get out of its way and don't buy in these zones. But that's how you have to be thinking. And so, I hope this day kind of highlights some of these important principles. Okay? It was actually a good example to highlight quite a few of them. The automatic fade zone, the potential buy here, if it was showing something, the principle of how a price reaches a zone, right? If it had reached this one straight down, you could get a bounce, a tradable bounce, but it bounced before and broke down, so you would get out of the way, and all the other principles. Now, don't worry, as we go into the execution section, these principles are going to keep coming into play time and time again with all of our execution, because at that point, when you're seeing a trade setup or you're looking to enter or exit, you're actually going to be thinking about these principles to decide if you should be entering at that place and where you should be exiting. So we're going to keep touching back on these principles, but I just want to show you a live example that kind of brings a lot of them into play and shows you how we actually utilize them in our trading. Okay? But the important thing here is to review these principles, have them in your mind while you're trading, make them part of your tactics, because these are, along with everything else that you've learned, going to be what we take forward to actually start executing trades, to have the setups, the entries, the stops, the exits, and that's the fun stuff. That's where it all comes together. But you need all this foundation to be able to make good trades. You see how much goes into just making it one simple trade? It's a lot, but you get good with this, and it's definitely learnable. And if you've gotten this far, that's great. You've learned a lot, and you'll be able to go forward and make some really good trades with a real edge. And that's the important thing here. So with that, this section ends, and we'll be moving to the next section, which is setups and execution.